Welcome back to Morning Trade Live. We've got stock futures fading back down. We're keeping an eye on equities, but we're also going to talk some energy and talk some commodities as well. Christopher Gersch is with me, Chairman and CEO at Altimus Capital. Chris, great to have you in the studio.
Yeah, good to see you again.
A good day for us to catch up because we've got a lot of action in commodities. We've got decent moving out of gas. We've got crude oil, which looks very heavy. I know most of you guys' portfolio is clean energy, green energy, but tell me about some of the stuff that's happening here this morning that catches your eye.
Yeah, so the natural gas trades, we're placing a lot of hedging orders right now. It's pulling off that 440 level, which is extreme highs. I mean, we've seen volatility of 50 cents in a day.
It was bid consistently for months.
Yes. The ranges, and a lot of the suppliers at trade desks actually will, their algorithms are closing down. Like they'll close down like 9:30 when we're actually placing some of these trades, and that's just based on some of this volatility. So even the institutional large Henry Hub importers have been having trade issues. But
wow, because of volume or what? Because too much to handle?
It is just the fact traditionally we're coming off, spring, we're winding down our positions on the longs. We're 176% higher than we were this time last year.
Wow.
I mean, just that alone is having all these individuals that are looking to hedge their energy portfolio up to 5 years. They're reaching out 5 years, and the volume that we've seen on the back years on the futures has been the highest I've seen in 10 years.
Okay, so now your own participation, that volume percentage you gave me, is that any of that looking at price momentum, saying, okay, we can ride this price momentum, or is it because the demand from data centers you're just telling me about that your other energy products are tied to, there's just more demand and action there that you have to hedge, and you have to have this other big pile of natty gas on the other side?
Absolutely. We have to hedge on that. And then on the electricity side, part of our portfolio is doing a lot of the on-site, behind-the-meter solutions that obviously generating on-site is a lot less, and avoiding these huge run-ups that we saw in commodities because of Ontario and that tariff that's coming in at 25%. Yeah. States like Minnesota, Michigan, Wisconsin now all of a sudden are going to be paying 25% more for their electricity. These are huge moves that are rocking the market. A lot of consumers are concerned.
What are the ramifications in energy markets when you're rocking the boat so much? I mean, we kind of know the ramifications of stock markets, right? Yeah. Deep bear markets or volatility can create bear markets. Bear markets can influence the economy. Right. Leverage in stocks can blow companies up. Right. What are those are there any like black swan risks building?
The biggest concern is really, the NGs, the EDFs, the NRGs, AEPs, these major utilities are so spread thin that they are now starting to develop their own assets to create on-site energy within these utilities. And so that's driving huge demand.
Prices up, right?
Prices are all coming up.
Structurally should move higher.
Absolutely.
How flexible are they once those changes are made? If then, let's say, I don't know, the next Canadian Prime Minister is friendly with our president, maybe the tariffs come back off or something. Yeah. Because, I mean, we're already dealing with that. Right.
Absolutely. If that comes off and energy goes back to where we believe that the range should be, ultimately, I think the damage has been done. I think you're seeing a huge investment into batteries, infrastructure right now across the board in a lot of the northern states, and that's driving battery prices higher. And that's why Tesla has had a pullback, and I think this is a great opportunity as clearly Elon's proximity to Trump. I think is only going to have. People think of Tesla as a car, company, and a lot of those incentives going by the wayside. Sure. They're really a battery company.
Right.
And so their technology is open source. People utilize them. And for the utilities, their technology is second to none.
So then kind of following along this transition, I like this starting from kind of what you guys are doing, the hedging, the natty gas market, then into kind of the energy investment that you do. And then from there, there's a tech discussion to be had as well. These nuclear plays, energy of all sorts, basically it sounds like you think is probably in a pretty firm bull market.
It's absolutely in a firm bull market. And the thing is, as you know, these nuclear plays, they take
How do you feel about
decades.
The nukes?
I think it makes the modular side, what Bill Gates is doing with 3 Mile Island, if we can develop and get those going, but there's still engineers that need to do all this work, that all these permits that need to be done. Yes, we can fast track it in a state like Texas, an ERCOT utility that moves really fast, but in PJM, a lot of these blue states, they're going to slow play these things. So developing battery systems that can be installed and discharge that electricity to where it's needed for these data centers, which is something else we can touch on maybe at a later time. But that fact is batteries is where I think the investment is going in the short term because of all the volatility in electricity right now.
I love that take, and it answers my most frequently asked question lately, which has been to people basically, what is like the policy trade that's unearthed? What is, because we were so focused on things like the dollar around tariffs, and it seems like some of that stuff is kind of normalized back out. The argument basically that you're making here, I think, is pretty compelling. That energy, power, batteries, and everything connected to that is probably already was in a secular theme, and now this policy is going to exacerbate that.
Yeah, absolutely. I have 4 kids, 13 and under. I'm encouraging all of them to be electrical engineers, just because that is where everything, the demand continues to go. We're installing, 75 million of these Blackwell chips in NVIDIA. They use an average of 12,000 kilowatt hours per year. That's the same as a house. How are we going to add 79 million of these, server stacks to the grid without dramatically impacting it? So we need to have deployable, fast energy. Otherwise, you're going to see rates skyrocket. And I think in June, the way that the futures are positioned, you're going to see a lot of that.
I think people who have been listening closely have been able to kind of read between the lines on some of the companies that we talked about in themes. All your investments private market investments, or is there something here? You got a hot stock pick for me?
Yeah, it's a private investment. I'm also associate professor at University of Chicago, so I got to be kind of
Sure.
But I think Tesla. Goes without saying, we're utilizing that technology. We've done 20 projects in 48 states, and Tesla, its ability to deploy and work with the underlying utility. Elon, politics aside, he's done a really good job with his technology, and I think that's the American battery play with all these tariffs coming in from China.
All right, great stuff. Chris, love the perspective. Really fun conversation.
Great, thank you.
Thanks a lot. Christopher Gersch, Chairman and CEO at Altimus Capital. Good stuff on a day with a lot of volatility in the commodity space, including natural gas, but a pretty impressive chart nonetheless. Doesn't sound like it's changing anytime soon.